Today we have on Wilson from DRW to talk to us about Bitcoin options.
Yeah. Good to finally be on.
Yeah, it's been a process, but yes, we're happy to have you. And we're getting to do it live too, which is exciting.
So this is good. I just have to have a disclaimer as normal. The statements made during the podcast reflect my personal views, not any of those from Cumberland DRW. They may not be relied on for investment, financial advice, or regulatory. This is not regulatory advice, and this is not prepared or tailored to address the particular financial needs of any person. So should not be the basis for making any investment or transaction decision.
You know that. Okay. Let's get a little bit of your background. What were you doing? Just start from the beginning.
Yeah. So I am currently head of OTC option sales at Cumberland DRW. Cumberland is the crypto arm of DRW, which is a big TradFi trading firm started by Don Wilson, hence the DRW. 30 years ago in the depths of the pits of the CME, right? And we trade everything from rates to coffee to electricity. And then Cumberland is the crypto part. I like to think of it as like the more fun part.
And when was Cumberland actually established?
Cumberland started as a mining firm in 2012, which is kind of fun. And then we quickly realized we're good at trading, but not setting up like racks and racks of mining rigs. Yep. So my background, I started in like rates vol back at JPM, and then went to PIMCO to do some investment grade, and then went to do some private credit restructuring. And then now I'm in crypto. So the joke on a desk is every time I change jobs, the asset class gets like spicier. And people are like, yeah, if you go any further out the risk curve, you become like Nick Cage in God of War.
Yeah, that makes sense. Okay, so give us a bit of overview of like crypto options markets, where you guys play and what you do specifically.
Yeah, so crypto option is interesting in that, first, let's contrast it to kind of the spot market. So the spot market always had this Bitcoin dominance and has kind of had this resurgence in the past couple of years with the launch of the ETFs. But on the option market, it's even more Bitcoin dominant, and where, I say day to day, I see 90% of what the options we see traded are BTC. And then there's some ETH, some SOL, and then now some XRP and HYPE, but it's mostly like 90 plus is Bitcoin. And that kind of makes sense, right? Like imagine if you came to me and you're like, hey, can I buy some puts on this lending protocol, right? And, so puts, as you know, that's insurance. It protects you against price downside. So I'm like, okay, did the protocol get hacked? Do you know something? I don't know. And I'm not going to give you like a good price or trade it in big size, right? Whereas Bitcoin, I don't have any concerns for that, right? That's number one. And number two is, this is slightly, more nuanced in that option. It's a price off of forwards, not spot price.
Right.
So in Bitcoin, because there is a futures market and so on, there is forward prices. Now, it's not as liquid as TradFi, where you have swaps that can go out 30 years, but you have something where people feel comfortable, they can price further out. So that's kind of like combined with that. In crypto, Bitcoin option is much more dominant. Bitcoin is much more dominant on the option side than just the spot side. Now, the downside is it's a extremely fun job, but I always said starting this job made me almost know less about crypto overall, because you drill down really deep on option markets, which means you see more majors. And I'm jealous of my kind of teammates who get to see the other more fun stuff, which I don't get to spend as much time on.
Yeah. So you talked about like the fact that, Bitcoin highly liquid and it's a much more established market and there's less, sort of unknowns. What does kind of go into establishing a market for an option around a token, right? So you talked about Bitcoin, ETH, now a little bit of XRP, HYPE. Did you say HYPE to some extent?
I said HYPE,
interesting. Okay, we'll talk about that in a bit. But like in terms of sort of going back, like what were that's really an interesting point you bring up with regards to DeFi protocols. Like, is this a founder unloading because they know that there's some hack or there's something nefarious going on? What is necessary to establish like a deep liquid options market for a token?
To have a market, you kind of need both buyers and sellers, right? So if you think about the crypto option market structure, there's kind of different types of in Bitcoin, you kind of have users on both sides. So the most common flow we see are covered call sellers. So these are basically people who own Bitcoin and they're selling calls on it using Bitcoin as collateral to earn some premium, which they say, hey, now this Bitcoin is generating some cash for me. So I'll have some spending money. It pays for my custody, whatever. And those are predominantly from crypto miners.
Yep.
So if you say, hey, I need to sell some BTC anyways, I might as well get paid for committing to sell.
Right.
And B, a lot of BTC OG high net worth individuals who says, yeah, my cost basis for Bitcoin is like 1K. If it goes to like 150K, it probably makes sense for me to take some chips off the table and like I can go convert that money to go live my life, right?
Yeah.
So you see kind of that's the predominant flow on the one side. And that's a little different than TradFi in the sense that Bitcoin basically has this giant supply of people who hold Bitcoin. And because it's not producing cash flow, it's not like generating rents and stuff for you. You have a lot of people who are eager to sell covered calls now. And because volatility is high, you get more premium for it because crypto options, just like all other options, is, volatility is higher, option value is higher. So they get more money or premium from selling the call. So it makes it kind of more attractive. On the other hand of the market, we have call buyers. So these are usually crypto funds. So what happens is a lot of crypto funds face this dilemma, right? Where, hey, Bitcoin, was the best performing asset last year, basically of anything you can put your money in, but no one's going to pay you 220 to hold Bitcoin, right? Because your end clients are like, what the heck? I can just buy iBit. I can just go on Coinbase and buy myself. Why am I paying you 220 to hold Bitcoin? So you get into this situation where it's awkward, where funds might be up like, 80, 90%, but Bitcoin is up 110% and the clients are mad at them. So on the one hand, you don't get paid to hold Bitcoin in your fund. On the other hand, because of your benchmark and so on, or people's mind share, you need Bitcoin exposure. So what they do is
So sorry to interrupt. Is this fairly common amongst like VCs and liquid funds?
Yeah, VCs and liquid funds, right? Okay. Because we're paying you to do something other than Bitcoin, but Bitcoin is the best performing thing, which you are not allowed to underperform.
Yeah, but it's kind of a bizarre concept because it's sort of like an obfuscated way to still have Bitcoin exposure.
So what they do is they buy calls and call spread to still get that Bitcoin upside exposure. And then they keep their cash to do things in other tokens. And that's kind of their value add. So they say, hey, the calls allow me to basically track Bitcoin exposure. And then maybe I can add like whatever percentage performance on doing outs on the top. And that's kind of their job, right?
Yeah.
Or the other way we kind of see that's interesting is you see this at the end of the year. We call this the Ari Paul trade because he was the one that talked about it very publicly many years ago. Or, hey, Bitcoin has had a nice run up. Your fund has had a nice run up. It's kind of Christmas. You don't want to be like staring at the screen for 15 hours a day the last 2 weeks of the year.
Right.
Sell your BTC or whatever. Lock in your exposure, right? Lock in your P&L. But what if Bitcoin runs up another 30K? Well, you buy some calls just in case.
So you can go into the St. Kitts for a week.
Yeah, so you lock in your performance, right? Your performance is locked in. You sold your spot tokens.
Got it.
So that's kind of the buyer on the other side of the market where we have the call sellers and call buyers. And then on the other hand, we have the put buyers where, again, it's a lot of miners who are hedging, right? They're hedging their production because, a lot of them were hurt really badly in 2022, right? So they're hedging their production. And there's two interesting kind of dynamics we see from this. Number one is because of basically post 2022, a lot of bankruptcy and restructuring in these Bitcoin miners, you kind of have some new leadership who are more from the TradFi background, and it's less kind of the OG Bitcoin who are much more political or ideological about this.
Yep.
And so they're much more open to hedging.
Yeah. So just sorry again to interrupt, but I've always been curious about this, and I'm sure I could like find this elsewhere. I mean, the guy who produces this podcast does a mining podcast, so I'm sure he's more well versed in this than I am. But explain to me, like, say you take 10 of the larger Bitcoin miners out there. How exposed are they to Bitcoin price? Because my guess or what I've heard is maybe 50 to 60% exposed to price.
It's a lot less nowadays than before, where, basically, like I said, new leadership got pushed out. So now instead you have folks who, or CFO used to work at Blackstone for 20 years and was in minings and commodities and basically understands that, hey, you're just still mining something you
right. And it's the same with gold.
Yeah. And the term I always say is, what's max pain? Max pain is not if crypto does not make it. Max pain is if crypto makes it, but you don't make it because you fucked up your risk management, right? And that's actually way more painful. So what a lot of these miners do is they buy puts, which is insurance.
Yep.
And then the way they fund them is they sell calls on it to kind of pay for the insurance because, I used to do this in TradFi too. And the thing about insurance is everyone likes insurance, but no one wants to pay for insurance.
Yeah.
And one thing we walk through with folks who trade with us a lot is don't get stuck on like round numbers, right? Because when you say how much they get hurt, people are like, oh, BTC is 105K. Why don't I hedge at like 90K? We're like, bro, no, 90K is just a random round number. What are your actual production costs? What is your electricity cost?
Yeah.
At what point do you start to hurt? At what point do you start to hurt a lot? And that's where you kind of start doing the protection, right? It should actually be much more related to kind of
your own personal setup.
Your own like setup in your production. Like, hey, do you have debt covenants, creditors, versus just like, because 90K in the end, it's just a random number, right? Exactly. It sounds like a nice round number, but it's just a random number. So that's kind of number one. And then number two, we have some of these kind of corporates and stuff that are starting to put a little on the treasury. Now, I don't think that's, going to be a common thing because in the end, your job is to do your main business.
Right.
But for the few that do it, I say, hey, this also, again, helps to make sure that crypto makes it long term, but the vol's like this. So you don't get washed out when it's like this. Just like, hey, you don't want to be the Bitcoin miner there were miners who, no names. In 2022, they were basically forced to sell at the bottom below 20K to pay for stuff.
Yep.
And now they don't have like that much Bitcoin on the balance sheet at 100K plus. And that really hurts, right?
Yeah.
And so, because if you think about mining, it's already a operationally levered. You basically already have operational leverage on Bitcoin.
Right.
You getting washed out in 2022 really hurts. And when we see those are the put buyers, and then that actually leads to kind of a related topic in different venues. So, crypto, you can buy options on Deribit. People can trade on CME. There are some other on-chain exchanges, or you can trade OTC. And because of different margining requirements and financing costs, it actually leads to kind of, how do I say this, different market dynamics, and pricing is actually slightly different, and it does not get arbed out. You think like, hey, prices should be the same across all exchanges. Why is it not? So Deribit is still, the biggest market. It's like 40 billion. And if you look at Deribit, because they take coin as collateral, people love doing cover call selling on it. Why is that? So say you want to sell calls on your Bitcoin again, which means if you commit to a price and if Bitcoin goes over that price, you sell at that price, right? So when you are short a call, you lose money as prices go up, right? So Bitcoin as collateral is good because Bitcoin prices, your collateral price is going up. So your trade and your collateral is matched up. And that makes your life easy. And, Deribit has a lot of cover call selling. CME does not take coin for collateral.
Yeah, it's all USD.
They have looked at it, but for someone like CME, the tough part is it's a lot of operational risk they have to get comfortable with, right? They have to get a custodian that they're comfortable with and so on. So that's when we speak to CME folks, giving them feedback, we say, hey, that's something we're looking into, but it's not going to happen in like 2025 in the near future.
Sorry to interrupt. CME is the only public venue in the United States you can trade options. Is that correct? For like an institutional sized, actor.
So there's two parts. There's different type of options now. CME, and then this is where we mostly trade. So CME is about like 4 or 5 billion. And then now there's also the creation of options on IBIT. So it's not options on the action. And on CME, people like it, but you cannot post coin as collateral. So you don't have this cover call seller because it doesn't make sense, right? You're selling cover calls. Why? Because you have coins, but you don't have cash. So you're selling cover calls to earn some premium and get some cash. And also because you don't want to sell your coin right away. But CME is like, hey, you have to post dollars as collateral. It's kind of like, okay, so I'm going to sell my coin now. Yeah. And then when prices go up, I have to sell more coins. It doesn't make sense. But on the other hand, people feel much more comfortable about CME, right? It's centrally cleared. It's a giant, 100-year-old institution. They have other business lines where there are people who, especially pre-Coinbase purchase, people were concerned about Deribit and say, hey, if I buy some puts on Deribit, there are people who say, am I going to get paid out if BTC goes back to 40K, right? Now, I'm not saying there are issues, but I'm just telling you this is when the folks who trade with, they're telling us that. Whereas the CME, if BTC goes to 40K, they'll just pay you out before the afternoon's over, right?
Yeah.
So that creates interesting dynamic where because you don't have vol sellers on a CME, but you have vol buyers. So CME, we think of option vol terms, vols are usually like 2 to 3 vols higher than Deribit because of this weird supply-demand dynamic. And you're right about US, non-US. For example, we are very regulatory compliant. And the way we're set up is, hey, we have folks who trade on the CME, and they are folks who used to trade other markets on the CME.
Yeah.
And they don't touch Deribit. They're like guys in Chicago. They used to trade Volt.
Let me just ask something real quick. Has Deribit ever had any type of, risk or run? I mean, I've never heard. I mean, Deribit's always been fairly stand up, right? I mean, I know they moved to Panama or something.
I think the way to describe it is, people are always managing their risk on the exchanges and counterparties, right? So I haven't looked through Deribit's financials. I am not the one at firm who's judging what risk Deribit has.
Right.
But basically, every firm, I think it's not unfair to say, views Deribit as a higher level of risk than CME.
That makes sense. Yes.
So, and then, we have offshore folks who trade on Deribit. So we love them. We use them all the time, right? We have offshore folks who are in Cayman, in London, in Singapore who trades on Deribit, whereas we have folks in Chicago and so on who trade on the CME. And the last part, the last type of market participant, we went through call sellers, call buyers, put buyers. There's put sellers. These are what I call like the true believers, basically. So we have some funds who say, hey, I'm a VC fund. I have undeployed cash to go around. I'm a believer in like ETH or something. They say, hey, if ETH goes back to $1,200, I will be happy to buy again. So they sell puts using cash as collateral with, strike at 1,200. So if ETH goes to 1,200, they get to buy again.
Got it.
So I would say, those are basically people who are using it to buy the dip, and they're, again, getting paid some premium on it.
Got it. Okay, so I want to talk a little bit about what you do specifically in terms of who you interface with. I mean, I kind of described the nebulous categories, but like who comes to you versus trying to trade on Deribit or going to the CME? And maybe we can talk a little about like OTC versus exchange and like where you fit in specifically and like your role.
So on OTC, there's a couple of things. Number one is OTC, you can absorb tremendous size, right? Because no dealer is going to show their full book on screen where everyone knows like, oh, this is what they're doing.
Right.
And number two is OTC now you can have more bespoke both strikes, expiries, and collateral terms that kind of fits what people need. So, you're a Bitcoin miner, you kind of did the math and you worked out, it's like, hey, I want to hedge with my puts at 72,500. Yes, we can do 72,500, right? Whereas, listed exchanges would be like, what the hell? Like, can't you just pick a round number? And the way we think about who I deal with a lot, it's actually a wide range. We have, TradFi financial institutions where they trade in every market and crypto options. We deal with them in everything else. And crypto market is just another additional touch point we have where they are not, I would say, Bitcoin, maxis or any truly crypto native per se, but they are volatility native, right? They can kind of look at a vol surface and say, hey, June is mispriced versus September interview, wings are mispriced versus at the money. And they would just take like a little hammer and hammer in the vol surface. And we have folks on that end. We have folks who are big family offices where, hey, you kind of don't want to be blasting out your trades everywhere, right? And also, they feel comfortable dealing with us because DRW, like we said, it's a big financial institution. We can negotiate bespoke credit terms where we have, specific custodians where they feel comfortable using. So all these terms, because the more money you have, the more you can say, hey, this is specifically how I want settlement to work. This is how I want collateral to work, which makes sense. So,
sorry, this may be a bit naive, but are these family offices and these large actors that are coming to you and engaging OTC, are they taking delivery in private keys, like some type of custodial setup? Like, how does that, what would you say the breakdown is generally versus you guys, suggesting a custodian or helping them custody these funds? Like, how often are they taking, full custody of maybe large bulk purchases?
So what happens is usually they are posting collateral to us, right? Say you are selling covered calls, you're posting BC. So there's one thing we have seen change in the market where previously folks would post a lot more directly to the dealers. But as the amounts get bigger, folks then say, hey, I already have a custodian that I use.
Yep.
Let's set up a custodial account. So they call it tri-party because three of us, right? It's us, it's the folks we're trading with, and it's the custodian, tri-party, three sides. And they have what they call ACA control agreement, account control agreement, where you have a custodian who is helping to do the operational. And that also makes things much cleaner, right? Because you have the custodian doing things operationally. That's kind of like internally between, hey, we have the wallets for collateral versus or deeper storage cold wallets where you're just keeping the coin in, and versus someone at the family office is like, hey, let me get my ledger out and send you 1,000 Bitcoin. Yeah. And so we have seen where when I first started in 2022, that's when I joined Cumberland, we didn't see much of use of custodians. Whereas nowadays we see a lot more folks who are using custodians. And so you guys don't see this, but Gwart is like a extremely skinny man, except he just took like a giant Starbucks like Frappuccino that's like 800 calories.
I'm bulking.
So, but yeah, we see a lot more use of custodians, and we also see custodians kind of realize this is a line of business that's a point of differentiation in the sense that because now there's these bespoke operation requirements and stuff, they can kind of show, hey, we are better than other folks at some of this, making your life easier and so on. And we see that a lot. And there are custodians that we work with closely. We don't recommend to folks, but if you ask me, you can say, hey, I can tell you, hey, who do I see folks using more of? And I would say what you kind of want to look for in a custodian, number one, obviously that you feel safe and secure, but that's kind of the table stakes, right? Beyond that, you say, hey, who are the folks that are operationally flexible in that? Because remember, in the end, the language in your docs, Indian has to follow operations, right? You can sign whatever in your ACA you want, but if the custodian can't do it, it's kind of pointless. So are they willing to, say, devote, resources to make some of your requests possible? Sometimes it's operational manpower. Sometimes it's devs where they say, hey, I want this feature. Can you do it? And they say, yes, I can, I'm willing to put 3 folks on it, code it up in 2 weeks versus, no, sorry, this is our standard offering. So I would say when you look for a custodian, those are the kind of things you look for. And then the third part is just kind of understanding of these legal things, right? Crypto ISDAs are, so ISDA is basically, the contract you sign for our OTC derivatives. We did in TradFi, and now we have in crypto. Crypto ISDAs are not that different than a TradFi.
Sorry, can you just say, it's like ISDA. What does that stand for?
ISDA. So it's basically a swap dealer agreement, international swap dealer agreement for where, a derivative agreement. So where we are, that's why you sign to kind of pre-agree on some basic terms. So when you trade with someone, you are not like confirming details every time new, right? That's called trading loan form. It makes things
like
much
starting
more
an account.
It's kind of like when you have basically a basic agreement on what you're gonna, you're okay with. And again, these are bespoke, right? That's why people do that. And one thing the last part I would say with the custodian is, legal for credit stuff on ISDA is kind of like very specific. Yes, it's great to have, your legal helping you, but it's also, you want to make sure you have some, as legal, for example, we have legal folks who just focus on this. And crypto is kind of funny. They have kind of crypto specific terms like what happens when you can't deliver collateral because the chain is down. It's not your fault.
Yeah.
Who gets to keep the airdrop and so on, right?
Yeah.
Imagine if Bitcoin had another hard fork because block size would happen again.
Yeah, and there's two competing coins.
And there's two competing coins. How do you deal with that, right?
Yeah.
Which one do you keep? And that's kind of like what I call crypto specific terms.
Interesting, yeah.
That you don't have because, Microsoft does not have like a hard fork, right? There's no like parallel Microsoft that happens in TradFi options. So the folks who deal with, like I said, family offices, traditional finance accounts, and then more and more now also some of these Bitcoin miners, and then now some of these corporates who are coming in. They say, hey, we're looking to add some crypto to a balance sheet, but I don't want this crazy vol. And when I say vol, it's kind of like relative terms to TradFi, right? Because Bitcoin vol, it's in the 40s right now. Sometimes it's a 40, 60 range. Back in the day, it used to be much higher.
Yep. You
get 80, 100. As the asset class gets more mature, bigger pool of money, it's harder to move. So you don't get this giant implied vol. But 40 is still a very high vol asset, even now. So I feel very awkward writing commentary saying like, hey, BTC vol is depressed at 40%.
I know, right? Yeah, I know.
Crazy to write,
relative to like an S&P 500 or something.
Coming from like TradFi where, coming from rates, right? So that's kind of, that was one thing that was always like a culture shock to me.
Yeah.
And Bitcoin vol markets are interesting in that because it's an asset where you kind of vols get bid up in a bull market where people are excited, they're buying calls, they think like, hey, we're going much higher. For example, in the middle of last year, everyone was like, hey, can I get DEC 100? So end of year, December 100K calls because that's what everyone was looking at. Right? Yeah. And so that kind of bids up the vols. Whereas in a bear market, even though you have an initial spike where people are buying puts, there's big realized vol and markets kind of like crash initially. In the middle part and the end part depth of a bear market, vol actually gets really depressed. Like in 2023, vols went to like 20.
Yeah.
Because it becomes that people just don't care. Yeah. People stop paying attention where it's indifference, right?
Yeah.
It's not hatred, it's indifference. Yeah.
The Gwart Show is sponsored by Ellipsis Labs, who I've been following for 3 years now. They're one of the strongest teams I know in crypto. Ellipsis Labs is a small engineering team with a flat structure. They build complex systems, primarily in Rust. For engineers who like challenges, here's the kind of problem they solve. A layer 2 blockchain needs to maintain 100 million accounts and generate a state root after each transaction batch. The root must be built within 50 milliseconds. How would you design a system to ensure the root construction is fast enough? High-performance challenges are core to Ellipsis Labs' mission as they build modern crypto finance. They believe finance needs more than an upgrade. It needs a complete rewrite. The success of their first product, Phoenix V1, speaks for itself, doing over $70 billion in organic trading volume. Now, Ellipsis Labs is building Atlas, the blockchain purpose-built for verifiable finance. I know this team personally, and I like them because they're unique in the crypto space. They have a long-term focus, they work in person from their New York City headquarters, and they're here to build products that fundamentally change the world of finance. If you want to learn more about their open roles, go to ellipsislabs.xyz/careers.
I wanted to go back for a second. I was asking about custodian setups and taking delivery, and I was thinking you do a good bit of spot as well, right? I know this is supposed to be about options. We're going to focus on options and derivatives and stuff, but you also do spot as well. Personally, what is the breakdown? Just out of curiosity, in terms of working with clients, like are you almost always brokering options, or you do a good bit of just spot selling for OTC stuff?
So two things I have to say, otherwise I know I'm going to get yelled at by come on. A, we don't have clients, we have counterparties, folks we trade with, and B, we're not a broker, we're a prop shop. So it's that these are positions we take risk, right? You sold us 500 BTC, it's our job to hedge. If BTC prices happen to crash and we hedge improperly and lose money, that's on us, right? Whereas brokers, they're just a middleman and they don't take risk. So I would say for us, the option business has grown tremendously, where it's now kind of 50-50, where previously the spot business was much bigger. And yeah, we're a big OTC desk. We trade with folks on, coins that are at the top and coins that are lower down the coin gecko list. And one thing that has come that's been new is also we trade spot with the ETF issuers. So what happens is we have an ETF team that kind of trades the ETF, the paper side, but there's also the underlying BTC they need to buy, right? This is, the BlackRock, the Fidelities, and the Bitwise and so on. All those issuers, someone is trading ETF, but for Create, they actually also need the Bitcoins.
Right.
So, we would trade with them. And this is why now you see this market dynamic where most of the ETFs in the US are priced off of some type of TWAP that happens sometime between 3 to 4 p.m. ET or 3:30 to 4 o'clock, depends on what index you use. That's the most liquid time because we actually just quote them very competitively. It's a very competitive business. And we just say, hey, we can, sell 1,000 Bitcoins to you at BR New York. That's the CF benchmark. At BR New York plus, 4 basis points, 5 basis points. Sometimes it's 0 basis points because the way our book is positioned, right? So if you are someone who is selling Bitcoins, you can kind of trade against that flow and get very favorable pricing. Like if you think about it, 1,000 Bitcoins at 5 basis points, it's actually crazy liquidity, right?
That's quite good.
That's crazy liquidity. And, last week was one of the days, IBIT was the most highest volume ETF, not just crypto, not surprised whether the biggest, but in the world, like bigger than TLT, bigger than SPDR. And that's crazy, right? And, that's why when people come and ask, they're like, hey, how is crypto liquidity? I tell them incredibly good. If you want to buy 2,000 Bitcoin, yes, we can do it. Price very competitively. And same thing on options market, we trade, BTC options regularly in multiple 1,000 BTC clips. And that just, and this is why you have to do OTC, right? You don't want to tell the world hey, I'm putting up selling calls on 2,000 BTC where you have this giant target on your back. You do it discreetly. We help you, we take it down. It's our job to, again, it's our job to hedge it. If we don't hedge it properly, we fucked up, right? And this is why I say the market has really kind of changed and matured versus before. And then the last part we're talking about is now you have options on IBIT.
Yeah, that's what I wanted to get into next. How has that changed stuff?
We're seeing this dynamic that we've seen in so if you look at, AUM, IBIT is number 1 by far. Number 2 is Fidelity, and number 3 is Grayscale. And kind of, I think, volume coalesces around the number 1, right? So we see this in gold, where there are GLD options, but there are not big option liquid markets on, what do you call it? On the number 2 or number 3 gold ETF, right? So it's kind of volume begets more volume. And for folks who are TradFi folks, where crypto is not your main focus, trading options on IBIT just make things operationally easy for them, right? We trade IBIT options because if you're a big TradFi hedge fund, you have some macro views, but you're not going to be hey, I now need, but crypto is going to be 1% of your portfolio. You're not going to be like, oh, let me get a custodian, let me get this signed up. That doesn't make sense for you. If you're like 1% of your portfolio, you just say, hey, let me trade some options on IBIT because I already have a prime broker who's quoting me all this stuff in TradFi. That makes it easier. And we're only going to see more of that, right? And the other thing we're seeing change is we have these, I would call cover call selling ETFs. So going back to the thing we told before cover call selling involves you getting set up on Deribit or involves you coming to me, setting up an ISDA, and that's more work. Whereas if you're someone who's like retail and so on, you're like, I want to do this, but I'm American, I can't sign up on Deribit. I am not big enough to sign an ISDA. How can I do this? So now there are ETFs where they hold the underlying IBIT and they sell options on IBIT to kind of get you that option premium on the cover calls. So they're selling you a package convenience product, right? Obviously, now there's going to be fees on that. And it's going to be, in fees terms, it's going to be more expensive than coming direct. But you couldn't have done it direct regardless, right? You're a retail who wants to do this on like $20,000, $9,000.
Yep.
So I would say laziness as a service is always a good service.
Yeah. So what do you think about the Coinbase acquisition of Deribit? This was a couple weeks ago now. What is the strategy here?
We think it's a positive thing in that, number one, for any exchange counterparties and options, bigger balance sheet, with some regulatory oversight is always good because in the end, options take trust, right? You have to trust that someone is able to pay you out. And Coinbase is a NASDAQ listed company, audited and so on. So that is good. And also B, hopefully there's a way to now bring some of this back onshore that allows US participants to kind of, obviously it's not happening day one, but to bring US participants. So the market, you have this kind of more or less fragmented market, right?
Yeah.
So overall, I think it's a positive. I can't comment on anything like, was it a good price and so on? That's not my expertise. But just from a market participant point of view, having a, Coinbase, which is the biggest US exchange, being kind of the mothership is always a good thing.
Yeah, but I'm curious then with, the emergence of ETFs and now, all sorts of derivatives around that, what do you think is going to be sort of the long-term equilibrium? Like what is the advantage now to somebody, coming through a Coinbase, Deribit exchange? I mean, where do you see the breakdown in terms of like who uses that versus who kind of goes the TradFi path? That's, sort of what we're starting to see emerge now.
Right. And I think that's one of the reasons Coinbase is doing this. Again, I don't have any insights from them. This is just my, outsider perspective. One of the reasons they're doing this is, hey, they kind of realize crypto, because of the ETF, has become very Bitcoin heavy again, right? And they are not the ones with the product, right? It's the BlackRock and the Fidelity and the VanEck, the one with the products and collective fees. And for a lot of folks, where as the product become more mainstream, it's just going to be easier for them to access it through ETFs. Like my mom is not going to get a ledger and get a Binance account and so on, but she can go on like Schwab and buy ETF, right? Or you're going to, or you could see so it just makes things easier, and you're going to have the market as move that way because you just have that distribution. It just makes life easier. Now, is that the original intention of Satoshi where now you have this centralized product? I would say that's probably not. But, this is kind of a black pill point of view where most folks, we talk about this in our group chat that we met. I said, unfortunately, most folks don't view decentralization with as high importance, right? They want to be able to call Chase to reset their password.
Yeah.
To them, they want to keep their money at a too big to fail institution because it's a feature, not a bug, which, I don't blame them, right? Yep. It's a lot of work to have to kind of set up your security and so on. It's kind of like decentralization is like six-pack abs. Everyone says they want them, but most people actually, they look at the work you have to put in. It's like, actually, no, having ETF in my Schwab account is much easier.
For sure.
And so you see this kind of market kind of moving towards that way. And so you see Coinbase, which is, in the business of, hey, we want people to actually buy the spot coins. How do I have other lines of business?
Yeah, other products, derivatives,
to be now, of course, in the end, the spot market still flows. Some of them still flows through Coinbase, in that when the ETFs get created,
they have to buy the coin
someone has to buy the coin somewhere. So that still goes through, exchanges like Coinbase and Binance and so on. But you kind of become the indirect participants, right?
Right.
And so that's kind of how I see the market as it becomes more widely accepted. It becomes this form where, again, it might not be it's probably not what Satoshi intended initially, but that's, like I said, laziness as a service is always a good business. That's how you get people set up. And I'll be 100% honest. I never sold a Bitcoin that I have bought. Very proud. But I own both spot BTC, and I also own them in ETF forms, right?
Yeah, I mean, it's I don't fault you at all for saying what you're saying. It's very hard for 99% of the world to wrap their heads around, in private key management and all of this stuff. So I don't have any qualms with what you're saying. I do obviously agree it wasn't Satoshi's original vision, but such is the progression of an industry. Okay, I want to pivot for a second. Why? So again, I'm very naive to options in general, so this is a good overview. I don't know if people find this interesting. Hopefully they do. But coming at this more from crypto native, I suppose. Why have options never taken off in DeFi? I have some suspicions, but I'm interested to hear. I say DeFi. Let's just say, on chain, or why aren't we all talking about options on Twitter? We're talking about perps. Why are we not talking about options?
So there's two parts in TradFi. Remember, again, going back to the point about you need two sub-markets. You have natural hedgers in TradFi, whereas crypto miners are kind of coming up on kind of changing their mind, evolving on hedging. Whereas in TradFi, hey, you are a big airline. Jet fuel is like your biggest cost. You need to go ahead jet fuel. So there's kind of a natural flow and demand for things like this, right? And you have this kind of this like natural volume that always exists. And, and some of the TradFi firms have actually kind of got very used to this. For example, a big shipping company that I know of, they actually have a jet fuel trading desk, prop desk, because they're just like, hey, we have the 8th, 10th biggest fleet in the world. We have so much intel on this market. Yeah. We can trade jet fuel better than anyone because we know it better than anyone. And so you have this kind of like natural hedgers, right? Or, for example, I remember in my previous life, talking to like a beer company in like Wisconsin, and they have like a giant commodities. I'm like, why is there this big commodities trading desk in like Wisconsin? They're like, well, we buy a lot of wheat.
Yep.
We buy a lot of natural gas to cook that wheat.
Yeah.
There's a natural, so they have natural demand and natural hedging needs. And that's one thing where in crypto, you don't have as much of this, right? And the number two is that in TradFi, a lot of retail option volume, the retail kind of trades options differently than institutional. Institutional, I look at options kind of a vol relative value thing, right? Like, hey, the vol curve is fairly flat in the sense that it's not going to cost you to go out another 3 months. So I'm going to buy like the September call and like sell the June call because that's like good value, right? Retail kind of views options as basically just levered upside, right? We're just slinging calls, right? We're just slinging calls because that's the way they say, hey, it's just a lottery ticket to them. Now, in crypto, because you have all these perps and access to leverage, retail doesn't really need to buy options.
Right.
They can just open a perp position, which, you can open really big perp positions, right? Which we have seen in recent days on Twitter. Yeah. So there's kind of not this need for leverage from the retail side. So that's kind of why I feel that because of these two, you don't have as big a natural hedging flow, and you don't have this, people who want upside. So options in DeFi has like never really taken off.
What do you think of perps going forward? I mean, I'm just asking somebody who's generally knowledgeable about markets. I'm curious, do we see perps on Tesla and Amazon, or is it just
for some asset? I think perps is a great innovation.
Yeah.
Now, for some asset classes, it doesn't make sense because there are people who actually want to take delivery. Like
exactly. Yeah.
There are the people who actually need the barrels of oil, and they like having the P&L is not good enough, and they actually need the oil, right?
For sure.
Versus on the other hand, there are products where, hey, you don't need the delivery, you just need it. In TradFi, we do call it a total return swap, right? Someone is just getting, hey, I'm just paying you funding and you're paying me the P&L of S&P, right? That's basically just a perp, right?
Yeah.
And, and I think
like GameStop perps would pop.
I would say, yeah, for something people to take a view on things, right?
Yeah.
So I actually definitely see, I have been speaking to folks who in Europe, because regulatory differences, somehow surprisingly, they could get perps first, which is like a shocker that Europeans can get into more stuff. But we are seeing like, and I definitely think perps on some of the TradFi assets where taking delivery is not necessary and people just want the P&L. Definitely makes sense. Again, there are people who wants like, the barrels of oil, but for a lot of other assets where they don't need stuff. No.
Well, also it's nice with like any BTC or any type of crypto asset, you can take delivery nearly immediately. So like that right there. But yeah, it is fascinating how you talk about with retail options, they're just punts, they're just lottery tickets. Whereas like mostly traditional, institutional players like may actually need to hedge out risk, or companies needing to hedge out risk for oil or whatever.
And this is a lot of NFTs in the previous cycle versus kind of the meme coins in this cycle. They are all just lottery tickets wrappers, right?
For sure.
So for a lot of these folks, they're like, hey, I'm buying some 5 million, 10 million market cap meme coin because they're hoping it goes to like $1 billion. That's just there are things that people actually need and use in crypto. And then there's stuff that are lottery tickets. And I think when people say crypto, they kind of like view it as one thing, where in my head, the longer I work, I'm like, actually crypto has kind of several different things, right? For example, one thing I love is payments and settlements, where about 18% of the world lives in a dollar and euro area. If you expand it to Swissy, sterling and so on, it becomes 25%. So if you only stay within that 25% bubble, you have no issues with payments, and you're kind of like, hey, why do we need stablecoins and so on? Because if you're just someone living in the US, hey, Venmo and your Amex Platinum are great, right?
Yeah.
But you're someone like me who says, hey, I need to send some money to my mom in an EM country. Hey, stable coins are amazing. USDC on SPL, right? And so on. Where I remember talking to a folk who's getting set up with us, where you swipe on Stripe, and then they take that dollar, which they convert to Tether, which they use to sling around the payment system so that to send to, Nigeria. So instead of taking like 7 business days to settle, which goes to like a bank branch 100 miles from your house, or it goes to something like Western Union, which just charges like 7%, goes to your local exchange, which changes that Tether for Naira. They're still a bit ass, but much cheaper than 7%. And their mom back home can buy groceries. And I say, hey, if you ever had to deal with the other 75% of that, you kind of understand why like crypto's awesome.
Yeah, completely agree. Okay, let's kind of wrap up with, give me a 5-10 year time horizon outlook. Where are options markets headed? Maybe just markets in general, if you want to opine, start rambling.
Yeah. So, no price predictions, but the way I think about Bitcoin will probably have a bigger and bigger mindshare among folks, right? In the sense that I do think people do believe in this, digital gold narrative, especially given when people look at markets and countries' deficits and so on, where we say, hey, debt to GDP is 125% plus. And the last time that happened, the way it was repaid, the US government is never going to default. Stop thinking about it. Just stop thinking about it. But you will probably, but the last time it happened after Second World War, they basically pinned the rates and, paid it back through inflation, right? Real rates went to negative 13, 14%. You can find a chart in Dalio's debt cycle book. I love that chart. Show it to everyone. And we say, okay. And so in that type of situation, something like gold and things become much more valuable, right? So, and if you believe that Bitcoin is digital gold, that becomes something you want to hold. And secondly, I say the distribution that we mentioned before would just make adoption much easier and faster, right? I remember talking to Eric, literally the first ever Cumberland crypto desk trading head. He was like, yeah, back in the day, I literally sent an analyst with like an envelope of cash to meet someone at a cafe outside of like a London train station to buy BTC.
Yeah.
I was like, holy shit.
Yeah.
Right? You're not going to get mass adoption if that's what you have to do, right?
No.
Versus now, it's like, go on your Fidelity app, click, whatever, right? And so I say the ETF and things like that would just continue to help with adoption, right? In the sense that, I think people might be a little too bullish on impact of ETFs in the short term and not bullish enough in the long term. You could see, I'm not saying this will happen, but you could see a scenario where, hey, it's in someone's 2055 target date fund and has some like 5% allocation. Every 2 weeks, the guy gets paid 5% of his 401k contribution just goes into it, right?
Yeah.
And so you could see long term, because of the distribution channels, that becomes more popular, right? Now, for me, option markets mature along with the traditional markets. I have tremendous, faith as we get more folks who hedge, and then it becomes less of a one-sided market. And so I am actually very excited. I think, coming to work in crypto was the best decision I ever made in my life. Aside from, that's probably it. It's the best thing I ever made in my life. And I would say a big part of it is, sorry, I know this is not a market prediction. It's also you get to meet open-minded people. The way I mean it, it's open-minded, not in a sense of just the asset class, but it filters people who are more open-minded about everything. So if I was in TradFi, I say, hey, I want to improve our option settlement process. They would be like, no, this is
how it's done.
This is the 17-step process. We're not fucking changing anything. Whereas I can talk to my ops guys and be like, yeah, let's set up a Zoom call. Let's see how we could do it better. And it just makes your life much easier and happier every day, right?
Inspiring.
And also same thing. The friends I meet in crypto is just like, they're open-minded about everything. So they say, hey, have you tried this thing in like workouts, or like, have you tried this, play some daily online game that we will not discuss, right? And and that just makes for like a better friend group overall.
Yeah, I would agree. Okay, awesome. Well, this was fantastic. Where can people find you? And maybe show yourself for a second. Who should sign in ISDA with you?
I am not here to show ISDA. I'm here to talk about crypto markets.
But you're allowed to show an ISDA.
You can get commentary on Twitter at Cumberland Vol, CUMBRLAND Vol. That's where we post our observation about markets. It's not so much, no, I cannot tell you what to buy or where to buy, but I can tell you, hey, this is what we see in the markets, and this is what we think thoughtful people are doing in the markets.
Awesome. Okay. And you don't want to show yourself personally, or you're not allowed to?
No. You can, that's the most important part.
Okay. Awesome. Well, thank you so much for coming on. It's fantastic.
All right. Thank you.